there's Singapore. A super modern city, known for its impressive skyline, bustling streets, and vibrant culture. It's not just a tourist destination, but also a big player in the world of money, finance, and global trade. But even this strong economy faces some question marks as we look toward 2025. The future is filled with both opportunities and challenges. Things like global trade troubles, a new US president, and shifting alliances in international politics all play a role in shaping Singapore's economic future. The interconnectedness of global economies means that changes in one part of the world can ripple through to affect others. Singapore's economy is really connected to global trade. Its ports are some of the busiest in the world, handling a significant portion of global shipping. It does well when goods, services, and money are flowing easily around the world. The city thrives on its ability to facilitate smooth and efficient trade. But this also makes it sensitive to problems. Any disruption in global trade can have a significant impact on its economy. 2025 will be a big year for Singapore. The nation will need to navigate a complex global landscape. It needs to handle tricky global challenges while using its strengths to stay a top economic player. Decisions made in Washington, Beijing, and other major cities will affect Singapore. The policies and economic strategies of these global powers will have a direct impact on Singapore's economic health. Understanding these outside forces is key to figuring out where Singapore's economy is headed. By staying informed and adaptable, Singapore can continue to thrive in the global economy. Global trade is a little shaky right now. The international markets are experiencing a lot of turbulence, and businesses around the world are feeling the impact. Donald Trump's return and his "protect our own" talk is causing concern. His rhetoric is stirring up a lot of uncertainty among global traders and investors. His trade plans could really shake things up. The potential for new tariffs and trade barriers is making many people nervous. Trump's America First idea is all about reducing trade deficits and getting manufacturing jobs back to the US. This policy aims to boost domestic production and reduce reliance on foreign goods. This means taxes on imports from important trading partners. These tariffs are designed to make foreign goods more expensive and less attractive to American consumers. His proposed taxes are big 25% on stuff from Canada and Mexico, which could significantly impact trade with these neighboring countries. 10% on stuff from China and maybe even up to 60%, which could lead to a trade war with one of the world's largest economies. 10% to 20% on everything imported, affecting a wide range of products that Americans use every day, and a huge 100% on BRICS nations if they try to make an alternative to the US dollar. This could have serious implications for global financial stability. These taxes aren't just for show. They are a clear signal of a shift in US trade policy towards protectionism. They represent a real change in US trade policy. The goal is to protect American jobs and industries, but the consequences could be far-reaching. The results could be serious. Businesses may face higher costs, consumers might see higher prices, and the global economy could experience significant disruptions. Singapore, a small country that relies heavily on international trade, is watching the US-China trade fight very closely. The stakes are high. As a major shipping hub, Singapore's port handles a lot of global trade, including goods going between the US and China. Taxes and trade barriers mess with this flow, hurting Singapore's manufacturing, shipping, and financial sectors. A slowdown in global trade means less economic activity in Singapore. The US-China trade war also creates uncertainty. This makes businesses nervous about investing and expanding, which further hurts Singapore's economic growth. The effects are felt everywhere. Singapore's financial markets are exposed to global risk aversion, potentially causing stock market ups and downs and currency changes. Investing in 2025 needs careful planning and a sharp eye for good deals during uncertain times. The global economic landscape is more unpredictable than ever, and investors must be vigilant. Understanding market trends and being able to anticipate shifts can make a significant difference in your investment outcomes. Don't put all your money in one place. Diversification is key to managing risk and ensuring that your portfolio can withstand market volatility. By spreading your investments across various asset classes, you can protect yourself from significant losses. Spread your investments across different areas and countries. This global approach not only reduces risk, but also opens up opportunities for growth in emerging markets. Different regions may perform better at different times, providing a balanced return on your investments. This lowers risk and protects you against problems in specific markets. A well-diversified portfolio can help you navigate economic downturns and capitalize on upswings in various sectors. Some areas will likely do better than others during global trade troubles. Keeping an eye on economic forecasts and market data can help you identify which regions are poised for growth and which might face challenges. Technology, healthcare, and everyday goods are good choices. These sectors tend to be more resilient during economic downturns and offer long-term growth potential. Investing in these areas can provide stability and steady returns. Developing markets, while potentially risky, offer growth opportunities. Don't ignore them completely. These markets can provide high returns, but it's important to do thorough research and understand the risks involved. Safe investments like gold, strong government bonds, and cash provide stability during uncertain times. These assets can act as a safety net, preserving your capital when other investments may be underperforming. Keep some of your money in these. Having a portion of your portfolio in safe investments ensures that you have liquidity and security, which can be crucial during market downturns. Stay updated on policy changes and world events, especially those related to US-China relations and Trump's foreign policy. Geopolitical events can have a significant impact on markets, and being informed allows you to make timely adjustments to your portfolio. Being able to adapt quickly is important in a fast-changing world. Flexibility and responsiveness can help you take advantage of new opportunities and mitigate risks as they arise. Stay proactive and ready to make changes to your investment strategy as needed. Trump's economic plans go beyond trade. His plans for the US also have big global effects. Tax cuts, while possibly good for the US economy in the short term, increase the federal budget deficit. This could lead to higher interest rates and more expensive borrowing costs worldwide. Trump's protectionist policies risk a global trade war. This could cause a worldwide recession, hurting global growth and stability. His unpredictable foreign policy and potential changes to global alliances add more complexity. The relationship between the US and Russia under Trump is especially uncertain. The global economy is all connected. Changes in US economic policy have ripple effects everywhere. Understanding these things is important for investors and policymakers. Despite the challenges, Singapore is not just sitting back and waiting. It has a strong economy, a stable government, and a forward-thinking approach to new ideas and innovation. Its great location, excellent infrastructure, and business-friendly policies continue to attract significant foreign investment. Singapore's government is actively looking for new growth opportunities and partnerships. It's investing a lot in research and development, especially in areas like financial technology, biotechnology, and artificial intelligence. The country is also in a good spot to benefit from the growth of Southeast Asia, a region with a quickly growing middle class and more consumer spending. Singapore's ability to bounce back and adapt is its greatest strength and asset. It has a history of overcoming challenges and coming out stronger and more resilient. Predicting the future is tough, especially in today's uncertain world. But by looking at current trends and listening to expert opinions, we can get valuable clues about Singapore's economic prospects. Economists and financial analysts mostly agree that Singapore's economy will keep growing in 2025, but not super fast. Key factors helping this growth include a rebound in global trade, continued investment in new ideas, and a positive regional economic outlook. However, there are still risks. Global trade tensions, uncertain world events, and potential slowdowns in big economies like the US and China could affect Singapore's growth. Singapore's future depends on its ability to adapt to these changing conditions, grab new opportunities, and stay a global leader in innovation and economic competitiveness. Experts predict that the Singapore stock market will see moderate growth, driven by strong corporate earnings and investor confidence. However, market volatility and global economic uncertainties could pose challenges.